side. I don't wanna waste what's left. The storms we chase are leading us, and love is all we'll ever trust. Yeah, no, I don't wanna waste what's left. And on we'll go, through the wastelands, through the highways, till my shadow turns to sun rays. And on we'll go, through the wastelands, through the highways, and on we'll go. Finding life along the way, melodies we haven't played. No, I don't want no rest. Echoing around these walls, fighting to create a song. I don't wanna miss a beat. And on we'll go, through the wastelands, through the highways, till my shadow turns to sun rays. And on we'll go, through the wastelands, through the highways, and on we'll go. And we'll grow in number, fueled by them to see the horizon, turn us to thousands. And we'll grow in number, fueled by them to see the horizon, turn us to thousands. And on we'll go.
The Dolphin wave. So the Dolphin wave, right? Got an alert here. I'm looking at all-time highs on gold right now. Wait. Let's go back to live price for a second. So, entering a trade. Let me know if the audio is good, Chad. No mic audio. Oh dear. Mic check. Hello. Mic is off. Okay, 1 second, Chad. Okay, is it working now? Now it's back. You sure? It's on. Okay, no idea what happened there. What was I saying? I am looking at all-time highs on gold right now. So I'm active in this trade. Looking to see what's going to happen here. I'm just going to leave this open, TP or SL with this. I wasn't expecting us to get to all-time highs this quickly, because we hit this yesterday Asia session. So we're going to see what happens here. But that's not what we're here for. What we're here for today. We're going to be doing some back testing. So we're going to be looking at the Dolphin waves. Now, for those of you who've been here this whole time, the Dolphin wave is a modification of the Turtle wave. But instead of using the 200 EMA, we're using the 100 EMA. So we're going to see if the 100 has a little bit better of a confluence than the 200. Pedro, yes, I bought at all-time highs. I'm looking for a 500 pip move, 50 pip move rather. I think my stop loss is something like 35 pips, 40 pips. just because we tend to get a little bit of a pop when you go through all-time highs. So I'm just looking to catch a little bit there, but it's only on my personal account, not risking too much on that. So we're going to go through all the rules we established with the 200 EMA and the turtle wave last week using these key levels, the EQ, Asia highs and lows, previous daily low, daily S1, daily R1, as sort of confluences as to what, how we're going to be taking these trades. But the primary initiator of the trade is going to be the 100 EMA. I'm calling this the Dolphin wave. Reason being that 100 EMA tends to hug price a little bit more closely. You're going to be able to get into more trades, getting into trades a little bit faster, and a dolphin is just a little bit faster than the turtle, so the Dolphin wave. Okay, so if you guys have any questions as we go along, feel free to pop them in the comment section down below. So what we're going to do with the same rules, we're going to be looking at 8 o'clock in the morning pre-London to 8 o'clock in the evening late into New York session as our times to trade in. And we're going to be using price crossing or rejecting the 100 EMA as our sort of entry target. So we're going to fast forward price here. We're going to wait for price to come close to that 100 EMA, such as it did there. So, in a situation like this, I'm looking at, we have the 200 above there. Unsure what price is going to do with the 200 just yet. We have crossed the 100 EMA, closed above. We've also slightly closed above Asia highs. Okay, let's pretend these two candles don't exist just yet. So, looking at that, what I would do, because we also crossed above Asia highs, and this is in London session, 10:30 in the morning, I would go 100 pips above there. Look to take long. Anticipating the price will probably also go towards the 200 EMA and the EQ. I'm going to be looking for a 1:1. Reason I'm going for the 1:1, the Dolphin wave tends to be a little bit more volatile. Let me just do it this way. So 50-point move, stop, 50-point take profit, 50-point stop loss, 1:1. And let's see how price played out with that. Okay, so instant stop loss there. What I should have done, if I wasn't too married to this idea as well, is as soon as we closed below here again with a strong little rejection, we would have maybe entered, hedged our bets, and entered a short position here. But I would have waited until it crossed the SL to enter on there, just because I don't like hedging while I'm in a move. And stop loss was close enough. Stop loss was close enough that, okay, cool, you wouldn't be too far from when price entered, because we would have done 100 pips below there, and that would have been right at that point there. So that would have been a loss there. Let's see what would have happened here, because now we would have been closing back in the Asian range. You could have got 1:1, or we can target previous daily lows or Asia lows. But we'll stick with the 1:1 for now and see how that plays out. So the Dolphin wave has the same issues the turtle wave has, in that does not work when price is in a range. So when price is ranging, that is a dangerous place for this strat, which is seems to be the case is happening right here. Price is in a bit of a range, because we would have entered the second trade at 11:15, and at 4:45 you'd have still been in the trade. Now, what you can look at is if price is ranging like this, especially with here, we came devilishly close to our take profit. You could maybe, and we could consider some exit criteria, like if you're still in the move 2 hours later, close it wherever it is, or something to that regard. We could also look at reducing stops. So because we used the 100 EMA as our entry, our bias, you could look at using the 100 EMA as a floating stop as well. You can see once we crossed past it, we retested the 100 EMA and we look like we're going for it again. So using the 100 EMA as a floating stop loss might also be something to consider if you want to stay in the trade for longer. But we'll just go with the 1:1, not going to adjust anything and see how this played out. But yeah, price was in a range here. Okay, I think we're going into Asian session now. Come on. Forming the new Asian range, and that would have finally taken us out at 2 a.m. in the morning. So typically for me, I'm not going to hold a trade like this. I would have probably, after this second test and into profit, I would have probably gone to break even and that would have taken me out. But for pure data collection, we can see like, okay, cool. Using the 100 EMA as a floating stop might be a good idea. Because if you had done that, let's say 100 pips away from the 100, you would have been able to reduce your risk quite significantly and held the trade until TP. Okay, so we're going to look at another trade next day. We're going into the Tuesday. So looking again for the 100 EMA as our confirmation to start looking for entries. Okay, so what happened here? The first touch the 100 EMA. First touch the 100 EMA. Touched, tested the EQ, closed below, quite a nice rejection. This is also where Asia high is. So what the idea would have been, the short idea would have been at looking at taking below this candle 100 points, taking it down to about Asia lows. The long idea being if we manage to break above and close above Asia highs, taking it maybe perhaps to previous daily highs. So setting up for both. Wait, let's just get 100 pips below here. Now this candle ran down quite a bit, so we want to see, do we even have enough of a vantage point to be able to get to our take profit comfortably? Yeah, so our take profit is just below Asia lows, so we still have enough of a vantage point here if we're using the Asia highs and Asia lows as key levels. Still have enough of a vantage point, and our stop loss is well above where Asia highs is, so we have a little bit of buffer there. So if this candle was to break its own low, come down, tap us in, this would be a comfortable trade. What we'd also look at is if price is not going to hold, is going to hold above Asia highs, taking a long idea of previous daily highs is what we would look at. But let's see how this candle closed first. So I see this candle closing very strong bullish. We might have taken that as an idea that Asia highs are not going to be respected or are going to be like tested out. This may or may not have tapped us in based on spread. Let's see, is this one counting it as tapped? So according to this, would have just missed us. Let's see what the next few candles do. Okay, we would have been tapped in there. This would have also closed above the 200 EMA, so a turtle wave entry could have been caught there. Let's see what happens. And that would have totally decimated us right there. So that would have been a loss on the... That would have been a loss on both the turtle and the dolphin wave. And if we had kept the original short idea, that would have just tapped us in. Going for... And that would have knocked us there. Let's just move this across. So that would have been 2 losses back to back. What times were these? 10 and 12. So we would have had 2 losses there. After 2 straight losses, we are out of contention for the day. We wait till price the next day. 2 straight losses in a row typically on both the Dolphin and the Turtle means that price is stuck in a bit of a range. So we'd wait until that range is broken. Waiting until the next day. This is a bit of a crappy one because price tapped us in, reversed. Looks like it wanted to retest the 200 EMA because it went straight past Asia lows. Finally retested that 200 EMA and then dipped down. So, right idea. The shorts was the right idea. Just that entry point maybe wasn't the greatest over here. Because we were looking for that original rejection candle over there. However, I don't think we would have gotten a good entry. Not with the Dolphin or Turtle Wave. Actually, if we had taken the Turtle Wave entry. If we had taken the Turtle Wave entry here with this rejection and close, our entry would have been roughly about there. We would have survived this these retests. So the 200 EMA Turtle Wave short idea would have been the better idea as opposed to the Dolphin Wave. So that's sometimes the issue with the Dolphin Wave is you have more trades more often, but you tend to come in sometimes too early. So that is a drawback of the Dolphin Wave, but we're still collecting data. We're still going to see what the overall utility of the Dolphin Wave is. So this is exactly why we backtest. It's just trying to see what the overall what's the word I'm looking for? What the win rate of the strat is. Where am I here? Okay. What the win rate of a strat is. How many losses in a row does it normally accumulate? How many wins in a row does it normally accumulate? After 20 trades, is this strat profitable? After 100 trades, is this strat profitable? Because you get some strats who require certain market conditions to work and certain market conditions where they just absolutely don't. So part of backtesting is figuring out, listen, over 20 trades, this strat looks like a piece of shit. It doesn't work. But over 200 trades, after full cycles of market conditions happen, this is actually proven to be a very profitable strategy. So you need to figure out, okay, cool, sometimes this strat can take 10 losses in a row. What kind of risk to reward ratio and what kind of risk per trade should I enter where I can survive losing 10 trades in a row, knowing after that I'm probably going to win 20 trades in a row. How about the 5-minute chart, Ed? Ever looked at it? The 5-minute chart, I find, is not as reliable as the 15. The 5, you get a lot of like break above, break below, break above, break below, break above, break below. You enter ranges a little bit more frequently with the 15. What I'm looking at doing is maybe looking at the 30-minute and the 1 hour, knowing that, okay, trades are going to happen far less frequently for you, but the bias on those trades tends to be more on the correct side. So that's what we're going to be doing for session number 5 next week, is looking at the higher time frames and trying to combine them with the lower ones if we can. So that's going to be the plan for next week. Moving on to this trade here. So we in Asia, we formed Asia highs over there. Now we've broken below the 100 EMA there, but we are in between the Asian ranges. We also have the, I'm assuming this is the daily pivot over here, and the EQ down there. So what I would look here, a bit of a change to the rules, because we would start trading at 8. I would maybe look at, okay, if we break Asia lows and come down, I would maybe look at taking it there. But with the EQ right there, it would be a bit of a risky play. Because what could easily happen is we'd break the 100 EMA, come down, test Asia lows, and go up for Asia highs. The overall trend here, because we had this bear, the overall trend here is bearish. So a bearish move would be a little bit more likely. We had this beautiful pullback. So based on that criteria, based on the overall bearish trend, I think taking it off the rip and hoping for the best would be something that would be doable there. So mechanically, 100 pips, or 10 pips rather, from that break, 50 pip stop loss, 50 pip take profit, and that would have been a win for the Dolphin wave there. Broke past the EQ, broke past, this is probably either a weekly or a monthly S1, weekly S1. The daily S1 down there, we could have used the daily S1 as a longer target if you wanted to have some runners going. Actually, let's see how price played out rest of this day. Because we were overall bearish. Yeah, it looks like the daily S1 would have been a good target to aim for. So if you use these key levels, knowing for us to hit our TP here, we'd have to break past the weekly S1. Next available target being the daily S1, and then the weekly S2. I'm assuming this is, yeah, weekly S2. So if you'd wanted to hold this, again, maybe using the Dolphin wave as a active stop loss, you would have had a good 3R trade on your hands here, even aiming for those previous daily lows. But we would have taken our 1:1 right there. Solid. Otherwise, that would have been a good trading day. Bearish bias being overall winner of the day. So that's also a thing to look out for, is in general, what is the bias of the day, regardless of what the Dolphin wave is still within our... Hey, okay. Looks like we've gotten double action this day. Now, strong rejection off the weekly S2. Breaking and closing above the weekly S1. EQ and Dolphin wave right there next to each other. If we close above the Dolphin wave, with high chance we're going to go for Asia highs there. So let's see what this next candle did. Okay, that one's not closed yet. Okay, so we closed there. I would have taken 100 points above that, well into Asia lows. Okay, let's see what would have happened. Ooh, did that one perfectly hit the way I wanted. Okay, let's see what would have happened there. Would I take the short idea again? I feel like the short move already happened. Unsure, or this could just be a retest of the 100, because we didn't have a retest of the 100 for further shorts down. Yeah, I think I would consider it. Let's see how this next candle closes. Okay, that candle closed. I would give it a squeeze, because I'm a machine gunner like that. Okay. So would have taken the shorts below there. Okay, let's see how this would have played out, Chad. Okay, would have been tapped into the shorts. Rejecting off that EQ. And I'm guessing that was a news day. 4 o'clock on a Wednesday. Wait, let's just check what that was. What was the date on here? 4th of September. Of September at 4, we had jobs openings. So, shorts would have come devilishly close to take profit. We were 14 pips away from taking profit on the shorts. The buys, however, would have taken profit instantly. Asia highs would have taken. So would have lost the shorts, won the buys there. Okay, keep that like that. And that would have been actually 3 trades for the day, which technically breaking rules. So the buys may or may not have happened that day, depending on how strict you are with the rules there. But yeah, we'll keep that going. Looking to the next day for another opportunity. But yeah, let me know if this is making sense. So the Dolphin wave, exact same rules as the Turtle wave. Think of it as the Turtle wave's more rebellious, faster cousin. Okay, what's happening here? Not quite getting a setup. Price. The Turtle wave would have gotten the beautiful buy here, because we would have closed it below there. Wouldn't have gotten tapped into the shorts, because shorts would have been activated down here only. Close above would have been activated by this or this candle, and that would have played out beautifully with next to no drawdown. Not quite getting an entry on that Dolphin wave yet. Okay. What time is this? 5 o'clock. Would have gotten this beautiful little rejection candle. Would have attempted the buys from there. There we go. So, we attempted the buys there. Overall trend, if we zoom out, you can see is swapped over to bullish. You could take it that this tap of the daily R1 was the pullback for it to continue up bullish. Now, we've already tested daily R2, and we just came shy of the weekly R1. So, and we still have Asia highs down there untested, Asia lows untested. So buys would have been really risky on this one. Would have been a very high risk trade. Let's see if we would have gotten lucky with this one. Okay, a little bit of range. Okay, would have gotten the win with that one. So this little retest of the 100 EMA would have resulted in the win there. If you wanted to go for a long target, we could have considered going all the way up to the weekly R1. Let's see if that would have played out. Again, using the 100 EMA as a dynamic stop. So right now, you still would have had some risk on the table, but it would have been about half. Going into Asian range next day. Again, this would have been the next day. The R1 still not hit. And looks like R1 wouldn't have been hit, but if you used the 100 EMA as a dynamic stop, you'd have gotten stopped out just below what main TP would have been. Alright, looking at new price action for the day. This is pre-New York. We got the close below. Now this close below was above Asia lows. So I would have been reluctant to want to continue price lower down because we closed above Asia lows. So I would want to see what the next candle did first. Asia highs pretty much tested up the wazoo. This is the first test of Asia lows. Price overall in a bit of a range from that high to that low. We could look for price to do a deeper pullback since we haven't broken above those highs yet. We could also see price continue further up. So I would want to see how this candle closes first before making my mind up on what to do next. And this was a news candle here. Okay, that would not have Yeah, this would have probably decimated you on the shorts, and maybe if you're on the long side, would have gone up. But okay, it will count as a no trade day just because of where the range was. We're waiting for this to close. This move would have happened within a minute of this closing, and I don't think that we would have been able to enter anything on there. So we'll leave that for what it is. I'm going to guess that was NFP. A wick above and below like that. I'm going to guess that was NFP. What we would try and do, however, let's have a look-see here, is try and trade the aftermath of that. See where this candle closes. Okay. That was a below there. Now we have, I'm assuming this is the, what is this, daily pivot? Weekly pivot down here. Daily pivot there, and that's where this candle closed. We rejected Asia lows with that candle closure, even though it closed below the 100 EMA. So I think would have been the plan to maybe wait until and see if we break past this candle at the daily pivot. This is a high risk trade though, because a lot of the vantage point we would have had would have been taken up already. 500 there, 500 there, and I think we've been looking for a close below the EQ, maybe go break even there, because it could reject the EQ and that weekly pivot and reverse right back. So I think we might have gone break even on this one a little bit sooner if we gotten a close below. That was a close below the weekly, above the EQ. 50-50 on whether you would have taken that. But had you held and not gone to break even, would have gotten a nice little win on the Dolphin wave there. Which, catching a win after a news day, I think is actually pretty awesome. I find news days tend to be so volatile, as you can see here. Like, the size of these 15-minute candles are... Like, this one 15-minute candle is a 150 pip move at 4:30. Crazy volatility. So, we were right in saying that we were going to look for a deeper pullback. It was just a chop fest into getting that deeper pullback. Okay, let's do one more day. Let's do the Monday after that week. If we manage to get a trade that Monday. Close, close. There we go. Okay. So, this would have been Dolphin wave because we passed the 100 EMA there and closed above the 200 EMA. We do have daily pivot right there, and we know daily pivot could be an obstacle for us. We do, however, have the EQ a little bit higher up. The EQ is somewhat a respected zone. Price loves to test the EQ. So, and we had broken past Asia highs, when this kind of close, had not gotten the retest of Asia highs. And we know a retest of Asia highs may have been necessary in order to get enough momentum to climb up. Knowing that daily pivot was right there, I might have waited to see what this next candle did if it closed above the daily pivot. That one rejected. That one rejected. I would say if we come back and break these highs, we would go for a buy there. And then for the sell idea, we would need a break below here and would attempt to aim for Asia lows. So that one a little bit more straightforward. So I'm more in favor of the sells over the buys here. But let's see. That can... We would have just still been in this. And would have gotten stopped out there. So would have lost that first buy. Sell, not quite confirming yet. Let's see what this candle did. Okay, so we would have taken... Attempted the sells here. We would have lost our vantage point, however, if we had attempted that here. Because I think these are the Asia lows now. Quite large-ass candles. Let's see here. What time of day is this? Oh, it's in New York. That's why the candles are so volatile. Freaking $5 moves in a single candle. So let's see what would have happened there. Tapped in. Ranging. And would have lost that one. Okay. So overall for this week and a bit, we would have gotten... that would have been one loss. 2, 3... 4, 5, 6, 7 losses to 1, 2, 3, 4, 7 losses to 4 wins. That should be 11 trades, right? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So for the first week of September, Dolphin wave not looking too hot. Wins 4, losses 7. We wouldn't have taken any BEs on there. So that would have been, if we're risking 1% on each one, that would have been minus 3%. Now, this is assuming on the trades where we did win, a continuation wouldn't have worked there. Could have tried for a continuation here. So it's assuming you were going for 1:1s on all the trades. If you had gone for extended targets on some of them, I think the stats would have been a little bit different, Chad. So yeah.
In the sky, gazing far into the night, I raise my hand into the fire, but it's no use, 'cause you can't stop it from shining through. It's true, baby, let the light shine through. If you